Hey guys, welcome to the Max Invest YouTube channel. Today we're going to be taking a look at NIO stock. Now I've already done a fundamental analysis on NIO, so if you want to see that you can click on the link above. NIO is one of the biggest electric vehicle makers within the whole world, and it is just behind Tesla in valuation for purely electric vehicle manufacturers. It is based in China and is having very high growth right now. We're going to take a look at the bull case for NIO and see why NIO could continue to do very well into the future, and then we're also going to have a look at the bear case for NIO and see why some analysts believe that NIO will not go well into the future. If you enjoy the video, like and subscribe, and remember, nothing said in this video is financial advice and you should always do your own research. We're going to begin by looking at the bull case for NIO and seeing why NIO could go very well into the future. Now, I will also note that the majority of analysts in Wall Street are actually very bullish on NIO, and this does give me a bit of faith in the stock in the future. However, I generally don't like to trust the analysts, and I do my own research instead. But one of the reasons why the analysts are very bullish on NIO is they think it has an amazing future ahead of it, where it will not only be in China, and it will continue to expand. Analysts have said, and Lee has said, that NIO is going to enter the European market in 2021's second half. This is very close, and this is great for NIO stock, as NIO will have a significantly bigger total addressable market. Of course, China is the most important market, and China will be one of the biggest growing countries for electric vehicle sales. However, it is great to see NIO is expanding into Europe. Analysts have, however, said NIO may not be expanding into America anytime soon, as the automotive regulations in China and Europe are very similar, so it makes sense to go to Europe first. However, in the future, I do believe NIO will be expanding globally, and they will be selling vehicles in many other countries around the world, like the United States. So this is one big bullish reason for NIO going well into the future. Another reason why analysts are very bullish on NIO stock into the future is because of the total addressable market within China alone. NIO is a Chinese electric vehicle company, and it's likely with the Chinese government's continued support over NIO that they are going to make NIO the biggest electric vehicle manufacturer in China over the long term. So China have already mandated that 40% of new vehicles sold in 2040 or 2030 must be electric vehicles. Of course, if this happens with the massive population, NIO will benefit significantly. Moreover, analysts say conservatively, and this is very conservative, that by 2025, 17% of new cars sold will be electric vehicles. And I do believe that this is actually quite a conservative number, and it should be a lot higher by then. So, as we can see, electric vehicles will continue to grow in the biggest country population-wise in the entire world, which is very good for the stock. Now, another good thing about the stock, and this differentiates it from the competitors, is the battery as a service model. This basically means the battery of a NIO car is a separate entity to the car. So, as 40% of consumers have done of NIO vehicles, is they will choose to get the battery separately and pay for that over the long term, pay for it in monthly payments. This will it's basically a subscription cost, and it will mean in the long term, users of the cars will end up paying more and more for the NIO cars. However, it will seem cheaper in the short term. This also gives them the opportunity to constantly swap their batteries, renew their batteries, and upgrade their batteries in the future, which is going to be very good for NIO. They say it takes only 3 minutes to swap a battery for the NIO vehicles, which is very quick and very good. This is so much easier than waiting hours to charge your batteries and all of that. So this is quite good for NIO. So, as analysts have said, this is a competitive moat around the business. This is one thing Warren Buffett looks for in businesses, and this is a big advantage for NIO stock that should help them and help bring in tons of revenue into the future. Now, I'll quickly break down my bull case. So, 40% of vehicles will be electric or vehicles sold will be electric in China by government mandate in 2030. We already know that. That's a fact, and that's really good. 40% of customers have opted for the battery as a service model, which is also very good at bringing in long-term revenue. NIO has the highest referral rate out of any car company. If I recall, it's around 50-60%, which is around 10% higher, which means NIO doesn't even need to advertise. Its users are actually referring NIO cars and NIO products to other users, which will significantly help the company into the long term, as it means they can spend less money on advertising and still get their name and their brand out there. NIO grows deliveries at a rate of 300% plus so far this year. They have grown in the first 3 months of this year at 400% and already delivered 20,000 vehicles, which is some insane growth, and they're expected to continue growing at around 300%, maybe a little bit less, as they did do quite well at the end of 2020. NIO is backed by the Chinese government, and a lot of people say this is a bad thing. However, China have pushed Alibaba and other companies to the biggest companies in the world. China own part of NIO. They own about 14% of NIO, and what China can therefore do is significantly subsidize NIO, really back in NIO, and if NIO has any troubles, it can basically be, counteracted by the Chinese government, which is actually quite good for the stock. And if China really want to have one of the biggest car makers in the world, they can really push NIO and do that, which will be good for our investments. And of course, NIO is the leading Chinese EV manufacturer, so it is actually most likely to go well in the future, being one of the leading manufacturers in the market space. Now, we are also going to see what the bearish analysts think of NIO and see why they are so bearish on this stock. Now, one thing that the bearish analysts say about NIO is that NIO has been a very popular stock this year. It wasn't until 2020 until investors became very excited about NIO and started buying up NIO. So of course, a lot of analysts will say, if the hype goes away from NIO, which I think it already has in the past couple of months, so it's not even that much of an argument anymore, but they say the stock price will drop significantly. However, I do think they are missing. The reason there is so much hype around this stock is because it's growing at 350% plus year over year. So it does actually make sense why people would be excited about a stock growing 300% plus every single year. I think that is kind of self-explanatory. Also, what they have said is, after Joe Biden's election, electric vehicle stocks all rallied. However, Joe Biden's election does nothing for NIO stock because it doesn't even sell in America, and this is actually a fair point. However, Joe Biden's election was symbolic of significantly more accommodative policies for electric vehicles in the biggest country GDP-wise in the whole world, so it was a big milestone for electric vehicles, and I can see how this helps the long-term prospects of all electric vehicles and indirectly NIO. However, this is a fair point as a bear case for NIO and could be a reason as to why NIO's valuation is quite high right now. And of course, this analyst says stocks to new highs could already be starting to dissipate when enthusiasm goes off. And I do think this has happened in the past couple of months, and I think it's starting to make for good buying opportunities of NIO around these levels, but this isn't financial advice. Now, the bear case also says there is a risk of retail investors cycling out of NIO. Now, I do think this is a relatively odd thing to say, as, NIO has a ton of company ownership and a ton of ownership from BlackRock. It's not really retail investors that own this stock. Obviously, a lot do, but it's not that not that different to other companies with the ownership breakdown. Retail investors and companies and big whales all make up a similar amount as they do in most companies, so it's an interesting point. However, and also, NIO and Tesla as electric vehicle stocks are two names that people really love and get behind, and I do believe that every time they dip, people are just going to be buying up the dip because they love these stocks so much. I don't think there will be that much cycling out of these stocks. They've built up a really strong fan base. However, where the criticisms get quite real is when they say there is going to be competition heating up. And I do also like the fact down in the bottom screen with electric vehicles growing by 41% in 2021. However, they have said that this could be broken down by the competition heating up significantly. And the big competitors to NIO right now in China are XPeng, Li Auto, and Tesla. Now, I think China don't want everybody driving around in Teslas the whole time, so I do believe it's likely they're going to prioritize Li Auto, XPeng, or NIO. Li Auto sort of does hybrids and not really pure electric vehicles, so I don't think they're that competitive, but I do definitely see XPeng as a big competitor to NIO. However, NIO currently has the brand advantage, NIO has the management team advantage, and I do think NIO will outperform other stocks like XPeng. However, this is a proper risk to the stock. They have also said that global legacy automakers like General Motors and Volkswagen will be big competitors. However, I don't really buy this, as all of these legacy brands have only just started doing electric vehicles. They have to sell their electric vehicles at a massive loss, unlike NIO, which makes 17% on the electric vehicles, which is very good. And generally, these legacy automakers take so tiny steps that it's completely ridiculous, and they're putting themselves very far behind, as Volkswagen have done for the past 20 or 25 years with basically all of their cars. So I don't see them being too competitive. They have also said that the company is growing at 100% plus every year, with revenue growth nearing 100%. And they have said, even if the company grows by only 50%, well, the shares will fall. And I do think that this is a fair criticism. However, I don't believe NIO will be growing by 50%. It looks like 2021 could be one of the best years, even despite the chip shortage. If we just look at their deliveries alone, last year they delivered 40,000 vehicles. However, in the first few months of this year, they've already delivered 20,000 vehicles. They're well on their way to delivering substantially more than 40,000 vehicles. In fact, probably 100,000 plus vehicles, despite the global chip shortage. So I do believe even though NIO is quite priced in, I believe they can deliver on this price quite easily. Now, a person that I have looked at on YouTube quite a lot, Sven Carlin, is a bear on NIO, which was interesting to me, as he does like Tesla a lot, so I was surprised he doesn't like NIO stock. Now, he has said that NIO has a big issue with China. There's obviously a lot of complexities relating to companies with China, as they're partly owned by the Chinese government. The US stock exchange could always delist them at any time, and these are quite real risks. However, NIO is preparing for this, and NIO are trying their very best not to get delisted, being as transparent as possible, and I hope this does continue. He has said the company will not be profitable soon, which is a fair criticism. However, I do believe the Chinese government will back in this company enough to help the company, even if it's not profitable in the near term, in the near future. So I don't think this is too much of a problem. And he has said that NIO is a little bit of a scam, even going into the US market, getting billions of dollars, raising tons of capital, and ultimately helping the People's Republic of China at the expense of US shareholders, which I do think is quite a cynical way of looking at NIO stock. However, this is the opinion of one of the analysts. So, in conclusion, there's definitely a bull case and a bear case for NIO stock. There are a lot of risks with NIO stock, and it is a high beta, high risk stock, and you should consider this before looking into NIO. However, I do align myself more with the bull case, and I am invested in NIO, as I do think it has a very bright future ahead of it. If you enjoyed the video, remember to like and subscribe, and thanks for watching the video.